All right, got another problem. Schedule C's, E's, and F's and partnership can't pay wages. You know why? Because they're the employer. You can't pay wages to yourself if you're the employer. You got to have an employee-employer relationship. And what's not, guaranteed payments are not wages. Yeah, but they're guaranteed payments. I don't care. Guaranteed payments paid by an LLC or partnership are not wages. And so if they're run by the owners only, that means Schedule C's, E's, F's, LLC partnerships, and that's the only people doing the work are the owners. No QBI deduction, because you've got to be an active business that has wages. You can be under the threshold amount. I don't care. I'm talking about the ones above the threshold. And then in the law, it says S corporations must deduct, whether it's paid or not, reasonable compensation. What's reasonable? We have no idea. We have no help from Congress and no help from the IRS. So therefore, we have to go to the judicial branch. And we do have court cases that give that guidance. But what have we always done? We've always tried to pay the lowest reasonable compensation to an S Corp shareholder employee, because we want to save on payroll tax. Now what do you have to do? What is the highest reasonable compensation that I can get by with to max out the QBI deduction and minimize payroll? We have no guidance. I'll talk about a couple of numbers, but I don't have the guts to put it into the material or even put it on a slide. This is just going to be between you and me. So let's take a Schedule C. Cliff's got QBI of $500,000. So therefore, his tentative QBI is $100,000, but he doesn't have any wages. So therefore, it's zero. You gotta have wages, Cliff. So a Schedule C is not the choice of entity. It's not the choice of entity. If you want to max out your QBI, what about a partnership or an LLC? Same problem. You cannot pay wages to a member or a partner. QBI deduction is zero. That's the wrong entity to choose. Well, if it's not going to be the partnership, maybe it's going to be to the S Corp. Let me give you a demonstration of that. Let's say in this example that we have wages paid to a non-related party, from a non-related party. So one of the spouses works for the Army. Then you got an S Corp shareholder that does pay wages to the shareholder, $150,000. So your qualified business income is $100,000, taxable income $270,000. So what's your QBI deduction? It's going to be the lesser of the 20% of the 100,000 or 20% of the 270. That means the 20,000 works, and this taxpayer just saved $7,000. Okay, so the only way we're going to get it is not with a Schedule C, E, or F partnership or an LLC. So we got to pay it in an S corporation. How much? We don't want the lowest to save on payroll tax. We want to save on payroll tax And along with payroll tax, we want to max out the QBI deduction. What's that? The number we want to take a look at is 2/7 of your QBI. What's 2/7? And that will give you the number to max your qualified business income. Then you have to compare it to your payroll tax. And when, and on even at 1.45 plus 1.45, I think that 2/7 is going to end up being your number. I don't dare put this in writing. So it's 28 points, a whole bunch of decimals up there. All right, I like that. That works. At least I, as an accountant, could take that and plan. It's only us that can understand this. And this is just one of the 50 ideas that I might have here. Okay, here's a different example. What I'm going to do is to bring this in wages from a non-related party, and then I got $1,500 from REITs and PTPs. What about REITs and PTPs? They get 20% deduction no matter what. No matter what. Then they got wages to the shareholder. So that's all I'm really shoving in here. Then you got qualified business income, tentative taxable income went up $1,500. Our deduction is going to end up being 20% of, and then we have the $1,500 that we have to add to it. So it's 101.5 times 20%. 20% of 271. What's the smaller of the two? Reduces tax by 35% tax bracket. At this number, 7,105. I just love to plan because nobody else knows how to plan. All right, now I'm going to give a demonstration as when we go over the threshold amount. Now, what's the threshold amount? 321.4 for 2019. So taxable income is 351.4. We're above that number. By how much? Look at the bottom. 30%. So we're 30% in the phase out or phase in. So you got taxable income of 351.4. This calculation is going to end up being done solely by the tax package. You got QBI of 75,000, so you're going to have to make sure that you have them accurate. So it's going to end up being 20% of 75 or 20% of you're in the reduction area. Your QBI taxable income, you're 30% in, so we're going to have a reduction. So computer will do this calculation. You just have to know, oh, you're above 321.4. We're now above the threshold, but we're not through the entire threshold. So here's an S corporation. Love the S corporation. 40,000 of wages. So 20% of 300,000, 20% of the wages, I get $20,000 of QBI deduction. Increase your wages